Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, June 24th, last week of the month here. We have no economic news releases scheduled for today. We do got quite a bit of volatility going on this week with the final revision for the GDP number coming out. We do got some home uh, data coming out. So important week, but today just happened to be a quiet day in the terms of economic news releases. So let's jump over to the fundamentals, which is driving the markets today. Stock market is way down. The Dow did at least hit a negative 200 so far this morning. And why is this the case? The reason being is China. China is in the headlines today. There's a huge liquidity crisis going on right now that is creating a huge. They actually had one of their largest drops on their markets, like 5.3% drop, and of course it's working its way over through Europe as well as to the U.S. So this is creating a huge stir in our markets, on a global scale here, where looks like we could be on the verge of another credit crisis coming up because of China. So stay tuned for that. And then also another side commentary. The Fed member Dudley, he's out of the New York Fed and is a voting member. He feels that the Fed has not been accommodating enough. He's very dovish. He had made some comments that, by historical standards, we're doing quite a bit, but for the current economy, he doesn't feel that we're doing enough as accommodative enough. So it's going to be real interesting to see, as we've seen last week, the big drop after Bernanke's press conference, how the markets treated that, obviously in a very negative manner, because anything even positive coming out, they're afraid that the Fed's going to pull back on the quantitative easing. And that could be a matter of a few months if we keep getting good economic data, but that could easily change. People could be, seeing the stock market crash, consumer sentiment could stop, go the opposite direction, and then hence also stop purchasing. So that could have that perception could also create a negative impact on our economy. So something to watch out for. Also, they are still kind of following this question as well as the tax hikes. After effects, they're still looking at data to see if that's playing a major role in people's decisions of buying or not buying. So let's jump over to the bond market, see what's going on. Another huge backlash today. We had another at least 100 basis points drop after Friday's bloodbath. We had about 130 basis points we lost on Friday, and then we had this huge opening gap. Now we're down to about 95.72 currently for the day, and that's about 116 basis points lower than what we left off even on Friday. So in these 4 days from Bernanke's press conference, we've lost between 4 and 5 points. So that means that pricing at Wednesday morning before Bernanke's press conference, basically what that means is that will cost you at no point now will cost now 4 to 5 points. So that's how dramatically the interest rates have crept up. And right now, every time you think that there's it can't go any further, it keeps going further. So real unusual times right now, as money's being pulled out, not only the bond market, stock market, as we're seeing being pulled out, but out of gold. So usually you don't see people pulling out. People are very timid. Investors are very timid right now, don't know where to put the money, so they're just taking it out of the markets entirely. They're not even putting it in bond markets, which is usually a flight to safety. So we have to kind of keep our eyes and ears open. But as a result, rates are getting worse again. All right, folks, thanks for watching. I hope you certainly appreciate your time watching, and I hope you guys have a wonderful day. We will see you tomorrow, and we'll just keep our fingers crossed, and hopefully things get back to normal rather sooner than later. Take care.